Welcome to Key Factors Podcast, where knowledge meets ambition in the fast-paced world of real estate and mortgage. I'm your host, Mark Jones, bringing you the latest insight, trends, and expert advice to navigate this dynamic property market. In each episode, we dive deep into the heart of the industry, dissecting market movement, exploring investment strategies, and unlocking the secret to real estate success. Whether you're a seasoned professional, an aspiring investor, or simply looking to stay ahead of the curve, this is the ultimate guide to making informed decisions in the world of property and real estate. So grab a seat and let's uncover the key factors that make all the difference. Welcome to Key Factors Podcast. Let the journey begin. Welcome back to another episode of Key Factors Podcast. I'm your host, Mark Jones, and we are powered by ReviewMyMortgage.com, the largest index of mortgage programs in the nation. And some of you may or may not know, but I started my career with credit, fixing credit, helping people understand what credit was and is and how important it is. And that is a lot of the reason why we started Review My Mortgage, to take it a step further in providing consumers directly with their options, viable options that they can actually use to secure financing for their first, second, third, who cares, different homes. And today I actually met an individual that has a strong belief similar to mine in the pursuit of helping people understand this stuff. I met with him yesterday and we found some synergy pretty quickly. So I'd like to have a discussion with him and go over some of the things that he's doing and how it's kind of changing the mortgage industry for the better. So without further ado, I would like to introduce my guest, Juan Bergas, and he also goes by JP. He is the regional director for UQUAL. JP, what's up, dude?
Thank you, man. Good morning.
Good morning. Good morning. How you doing?
I'm fantastic, man.
Yeah?
Thanks for having
Move that
me.
mic closer so we can so they can hear all the decibels in you.
There we go.
There it is, the bass in the voice. So JP, tell us about yourself, man. How'd you get into this business? What got you into the industry, so to speak?
So I moved here from Argentina in 1999.
Okay. So safe to say Ginobili fan.
Yes, sir.
Ginobili!
Spurs.
There we go.
Even though the Nuggets are killing me. Leave that for life. But no, I moved here in 99, right? And very, very different. And as you know, very, very few countries even have the ability to lend.
Correct.
Right? So I moved here and I started high school and I turned 16, got a job at the Olive Garden.
Okay.
And I remember seeing my cousins, which, hey, God love them, but a couple of them are not very bright.
Okay.
And yet they're driving around, 16-year-olds with cars.
Yeah.
I'm like,
how'd you do that?
how do you do that? You know what I mean? Oh, it's credit. Okay. It was a thing, right? Fast forward a couple of years, end up getting my first $300 credit builder.
Okay.
I thought it was free money.
Yeah. And as did I when I got the whole college t-shirt and everything else. Yeah.
I thought it was free money and got my first collection, things like that. And then I remember my mom getting advice from one of my aunts about getting, and you guys have it here in Texas, everywhere, by the way, Royal Prestige.
Okay.
So it's a little blue tent outside of the supermercado.
Yeah.
And they have on there the Hispanic, the Latino credit building friend
Okay.
at 30%. And so it just didn't make sense to me. I knew there was something there, but I didn't understand it. And nobody was teaching it to me.
Right.
Nobody explained it to me. So that's kind of how I went down the rabbit hole. And here we are.
So here we are is skipping quite a bit. I want to dig in a little bit. So your background, you're currently living where, in Colorado?
Yeah, I'm out in Denver, Colorado.
Okay, good deal.
Right outside.
Mile high, right?
Yeah,
Amen. Matter of fact, I went to Colorado the day that they legalized marijuana. It was a great day.
I'm interested to see how many people went there.
Oh man, there was tons. I was interviewed by a journalist. We took cooking classes. It was all educational. Matter of fact, it was for a bachelor party. And instead of going out clubbing and doing crazy stuff, my buddy, who is a financial advisor, we went with an attorney, financial advisor, and a teacher. and we took cooking classes, tours. They educated us on so much that it changed my perspective on a lot of things. So yeah, no, it obviously everything, anything in this world can be used for bad or good.
Yeah.
I tend to use it for my own medication because I'm ADD AF.
No, think about that real quick. The amount of benefits that are out there, right?
Oh, for sure.
And then you got to go back to, I think it's what, early 1940s.
Mm-hmm.
What's that movie?
13th.
Reefer Madness.
Oh, Reefer There you go. Yeah.
Remember that?
Yes,
Like,
absolutely.
people
That's right.
She got high and jump off a window. Like, no, bro, we don't do that. Just sit around.
You just sit around. That's exactly right. I might eat all your food. That's funny.
That's awesome.
So in Colorado, how did you get linked up with UQUAL? I know we had talked yesterday about this, and it ties into somebody that we personally were using not only as a company review my mortgage, but we would send our credit repair folks to them. Probably this had to be maybe 4 years ago prior. So from 2020 on till maybe 2023, 2020, 2021, 2022. And then as we launched the bigger site, we couldn't get a hold of the owner, the person that we were speaking to. So we shifted gears and went with a different company. But now that you guys have evolved into something else, and I don't know if it's an evolution or that he branched off or created something separately, but were you a part of the national credit care side of things? Tell me about that journey, man.
So let's go pandemic, right? Because this is basically what everything kicks out of. I used to be with a large law firm.
Okay.
And my job was specifically to deal with debt settlement.
Gotcha.
Right. Busy times.
Yeah.
Absolutely. A lot of people unfortunately fell into hardships and so on. And then I remember I just wanted to do something a little bit different by stay within the credit world or the finance world, if you will, because credit and finance equal mortgage.
Absolutely.
Right?
Yeah.
And at the same time, I'm very, very interested about technology.
Okay.
AI developments and all of that. So when I got on board with NCC, I was actually one of the trainers.
Okay.
And little by little, I think there were some key people there that noticed that you put a credit report in front of me, and I'm, it's kind of like
reading the Matrix.
Well, the meme where you're just seeing all these things. I'm like,
whoa,
and people are like, well, I'm like, well, if you look at this and this and this and this, and we'll get into that. But the idea is like, I just started seeing things so quick.
Sure.
And it pissed me off because, to be honest with you, they think that us as consumers, we're complete idiots. That's
true.
What they think. And when I say they, I'm talking about the three, right? TransUnion, Equifax, Experian. So from there, Kyle, my boss, the fierce leader there, they've had this thing in development going and going and going, because the reality is that NCC did an amazing job at what was the legacy product, which you and everybody else knows as credit repair.
Mm-hmm.
The reality is that in the mortgage world, credit repair is just not enough anymore.
Right.
And I always tell people, look, you can have a 720 credit score, but if you're broke and your DTI is 70%, you can't get a loan.
Man, I love that you say that. It's correct.
And then flip it, right? Because I got a lot of friends that made it big during the real estate agents in Miami Beach.
Sure.
To give you an idea of who the type of people I'm talking about, made it big during the Bitcoin boom or boost. But they called me like, hey, dude, I just got on Credit Karma, which I should slap them for even being on there. But I got on Credit Karma. My credit score is, Mark, a Credit Karma 520.
Oof. That means real score, you might be 480.
If you're lucky.
If you're lucky, that's correct.
And the other, Credit Karma says I have it 60. No, shut up, dummy.
You know what? When people tell me that, and I hear it at least once a day, well, my Credit Karma score says this. My immediate response, and it is intended to get them to chuckle or laugh a little bit, lend some humor to them first before I lend them money, is ask Credit Karma for the money for this loan. And instantly they go, well, no, that they don't do that. I'm not pre-qualified for anything. I mean, how? Exactly.
Click here for this credit.
That's right.
But it's funny because a lot of those applications, believe it or not, the majority of applications done on Credit Karma, and by the way, like you said, is right. They do not lend you mortgage. They are just pushing different credit card products.
That's correct.
The majority of those actually get denied.
I agree. Yeah.
By the way.
That's right.
But the point is, you can have great credit, crap finances, or you can have a lot of money, but you're an idiot and don't know how to manage it. And then your credit is going to hell because you were too busy partying or whatever.
Correct.
We've all been young and stupid, right? Let's start with that.
That's right.
We've all been there. The problem is you got to figure out if you want to play the game. And in our world, unless, you're Dave Ramsey, you got to play the game, right?
That's right.
Okay. Well, it's the same thing if I throw a Monopoly box at you and I'm like, play. But I never told you that inside you got a set of rules, right? Rules that you have to follow. There's directions on how to play the game. And so that's my passion. And people, it's like, hey, why do you do what you do, right? Why do you travel once a month, twice a month? Why do you leave your kids behind? And I got 2 boys. And it's very simple. The mission is very, very straightforward. My mission is to shrink the gap when it comes to finance and credit education, period. Which is why I'm sitting here.
Yeah,
right?
I love that. So I guess in your background, was it working with credit initially, or was it more of a sales role? I mean, what did you do prior to jumping into with NCC and then the UQUAL that allowed you to be so great at what you do? I mean, you are very knowledgeable on this subject. I figured it out yesterday when we were speaking the same language. I've been working for credit or with credit for many years, even before I got into mortgage, like I mentioned. And there's another gentleman that I have on the podcast quite often, Dylan Shively, shout out, that I can level with on these types of things and shoots it straight. So what allowed you to have that knowledge? Was it just trial and error, failing?
I had a friend, Jason Brown, shout out to him, who said something it's once you understand how to leverage their money, right? Their money, then you understand how to create wealth.
That's very true.
Okay. 76% of the American wealth sits in where? Where is it?
70% at the 1%, top 1%?
No. 76% of the money in the United States is in real estate.
Absolutely.
Yes, sir. Yes, sir. Right? Everybody that you look at in that 1%, in one way, shape, or form is involved in real estate.
Absolutely.
Okay, so why am I going to try to reinvent the wheel when already somebody laid out the path for me? So that's when I went, what's that's right, laser focus.
Laser focus. That's right.
And so I'm like, okay, perfect. If I'm going to play that game and teach others how to play the game, I got to follow the people that have the answers. Thing is that, as you know, credit is a very organic thing. It's constantly changing, evolving. The moment that you and I caught on to something, they changed the rules.
That's true. That's
right. So once Jason was the person that kind of pushed me in understanding the markets, understanding Forex, understanding what happens with your money when Mark Jones goes and puts $10,000 in the bank. Well, what happens to that $10,000?
Well, the bank is going to make some interest on it. They're going to loan it out. They're going to do all kinds of things with your money while that digital number sits there.
Right. And you get what?
I get
in return.
0.0. Yeah, I was going to say we're supposed to get interest, but yes.
I'll give you a CD for 2 years for 1.2%.
Exactly.
No, thanks.
No, thanks.
Right. So the idea is once I understood that they went hand in hand, that's when I dove in. Prior to that, sales, absolutely. I worked at every restaurant, I was the #1 wine pusher at the Cheesecake Factory when I worked there, Like I understood what people do things for one or two reasons, right? They're trying to get away from pain, or they're trying to achieve pleasure.
Oh, I like that. And I've never heard that articulation. That's actually pretty spot on.
That's the only reason you do anything.
Yeah.
Right?
That's right.
That's the only reason. So if I notice you were on a first date, oh boy, I'm about to slap you with an $80, bottle of wine. Just because I want that lady to get impressed by you. See what I'm saying? So I knew the
leverage,
and the number of having that thing.
Yes.
Okay. Well, none of those things create wealth. One thing does, and that's real estate.
That's very true.
It's the only thing that you can go and take out with their money, leverage their money in order for you to create wealth. Not only that, if we look at it historically, right, and go back to redlining back in 1930.
Sure.
Okay. How is it that last year you had a 22% increase in home purchasing in the Latino community, but there was no increase within the African American community?
That's a good, I mean, if you ask me, I would say credit.
Okay. Yes. But most importantly, there's a distrust when it comes to the banking system.
Okay.
There's
very
an
good.
absolute distrust when it comes to the financial system.
Mm-hmm.
One of my really good friends, Montel Watson, he's a very, very big guy within the diversity lending movement, right? The diversity lending is what we want to push, why we want this information out there, what I want to shrink that gap. He used to be a loan officer.
Okay.
And his dad will not have a bank account. It's like, Dad, I work for the bank. Nope, keep it in my pocket. He called it and Montel always tells the story, call it walking around money. We'll go, cash his check, put it in his pocket. Think about that.
That's horrible. But I can see how people would still do that, especially if they've got that large distrust for the banking system and everything else that surrounds it.
How many times do you have a Hispanic borrower that comes to you with stray cash?
Oh, quite often. And as the years went on, now we lead with that in the conversation, just making sure you understand that cash cannot be used. That money that you keep under your mattress, I'm going to need you to deposit that now, and it's got a season for the next 2 months, or we have to go this route.
Right.
Because especially when I had a branch down in Brownsville, Texas, it was everywhere. I mean, they did not really trust the banks. They wanted to meet with you in person. They wanted to bring their documents in person, and they wanted to bring you cash. And it's like, guys, that doesn't fly here, unfortunately. But yes, go ahead.
But the mattress thing?
Yeah.
Mark, people think that's a joke.
Right. And it's not.
It's not.
Right.
It's not. I've seen people legit tell me, oh, I have X amount of savings. As you know, and when it comes to the UQUAL platform, right, it's the marriage between finance and credit with one goal and one goal only, and that's to get you into a home loan. So that's what the entire fintech it's developed for. But I have now access, if JC is my client, right, and he's like, hey, I'm working with Mark at I Think Mortgage. I'm trying to purchase a home. Awesome. How much? $700,000. Fantastic. What type of loan are you doing? Oh, I'm going for a conventional. We need at least a 680. I'm right there. Okay, cool. But I have now access to seeing the finance, the DTI, and the movement, right? Are you saving money, right? Are you reducing your expenses? Are you making those behavioral changes that need to be made? I've seen people spend $500-$600 on a pet.
Yes.
Right? We are all guilty of it. $400 or $500 a month on DoorDash, Grubhub, and so on.
It's true.
And people are like, Juan, I got $20,000 saved. Well, they're not in a bank account.
Right.
The loan officer cannot use that. Where's this money? It's under the mattress.
Wow.
Under the mattress. It's
true.
People think it's a joke, but we hear that so often.
No, that is very, very true. And with that being said, I mean, you guys, what you're doing is far advanced from any other credit repair company, credit monitoring company. You're providing value in a very intentional way and with the end goal of purchasing a home. And for me and my loan officers, we will help you fix the credit to a certain extent. There are things that are outside of the scope of our expertise. And before we go on doing that, we need your documents. We need to meet with you via Zoom or in person to go over your options, because let's remember, the intent here is to purchase a home. That is the end goal.
Yeah.
And I feel like you guys and your new business model is adopting literally what we're talking about. You can fix somebody's credit so that they can go get another credit card or another car, but you guys chose to be very intentional on the aspect of purchasing a home. That is the end goal, but here's how you do it. Here's how you prepare yourself. So before I even ask anything else, I want to introduce what UQUAL is. So let's throw this on. JC, if you can throw this reference up. I've got UQUAL. This is their website that you can see here. It says your path to loan approval starts here. And I want to play a quick video for you guys. It's basically 2 minutes long, gives you a little breakdown, and then we're going to talk about it. And we're going to talk about the nuances to this. So here we go.
In this video, we'd like to share how UQUAL helps borrowers get loan ready, bringing their American dream of homeownership to life. Our proprietary platform is obsessed with loan success, and a big part of that is showing borrowers how close they are to their mortgage goal. That's why our members receive a loan readiness score. The higher their score, the closer they are. The loan readiness score is built around everything lenders care about. When members log in, they're provided with an action plan, which includes clear steps to progress towards loan readiness. So if they need to work on their DTI, we'll make recommendations on how to knock out debt. Money management is a crucial part of loan preparation. At UQUAL Money, members can link their bank account, track their spending, and monitor their progress as they pay down their debt. Having strong credit can make or break a mortgage approval, which is why at UQUAL Credit, we give our members the ability to refresh their 3-bureau credit scores and reports monthly. But that's not all. We also provide up to $1 million of identity theft insurance in case their identity is stolen while they're preparing for a home. We collect required loan documents throughout the process so that when they're ready to apply, so is their paperwork. Finally, our Learning Center educates borrowers on the home buying process, credit, debt, and saving money. Although what you currently see is our platform, what you don't see is our hands-on coaching staff who connect with our members, guiding them through any questions, concerns, or simply being a sounding board for their steps to loan approval. So there you have it, a comprehensive member experience with one goal, getting borrowers loan ready.
So you can throw that out. That being the case, that is in line with what every loan officer should be striving for in their consumer database, in their pursuit of helping as many people as possible. Because let's face it, as a loan officer, you're not going to get 100% bullets, meaning everybody's going to have 800 credit scores, money in the bank, and a great DTI. It's just not going to happen. So you're essentially building this pipeline of folks that you can't help right now. And is it up to you to coach them along, keep them on track, keep up with their documents, keep up with their DTI and what they're doing and changes? In all honesty, yes, if you want to be a great loan officer, but there's no way you can. And I'm being honest with you. If you've got, let's say, 10 credit pulls every week, you've now got 40 credit pulls that you've got to keep up with. And one thing I know about the time is it doesn't stop. So that in itself would continue. And it's just too large of a feat to tackle as a loan officer or a team. So you guys are taking this concept of loan readiness and applying it to credit repair, which are two super important things that, in my opinion, they're not taught in school. The credit piece, the financial piece, the financial literacy piece. And then you're adding the coaching to it. You're showing them and helping them understand their DTI, what goes into it, monitoring it step by step. And as mentioned before, it goes very hand in hand with what we've built. And I'm looking forward to potentially talking about that further. But tell me from your aspect how you've seen UQUAL help customers and some of the companies that you guys are with. I mean, enlighten us. Talk about that.
Yeah. So one of my happiest days was back in April 2022 when two major credit repair companies, right? Because credit repair just has a stigma to it.
I agree. Yep.
So I like to say that UQUAL killed credit repair.
Very good.
In a way. But two large companies, one very, very famous, Lexington Law, ended up getting hit by the CFPB,
That's
right? And you don't mess with the CFPB,
Nope.
you know. So the deal.
Matter of fact, we'll just edit that part out because we don't even want them seeing this.
There you go.
I'm kidding. I'm kidding.
Shout out to compliance, JC. But what? Two things, right? Let's start with loan readiness versus credit repair.
Okay.
It always goes back to that, right? You
Yeah.
can have a 720, but you're broke. You're
Yeah.
not getting a home. The only vertical that we exist in is the mortgage industry, because we understand that, right? I got people in my team that used to do underwriting. I got people in my team that at one point or another had their NMLS,
Makes
right?
sense.
So the other thing is, when a client is trying to take out a loan, when a client is trying to buy a new car, that's very transient. That comes and goes, right? The average American changes cars every 3.5 years.
Yeah.
And by the way, we just hit the highest car payment, $648.
Wow.
$648.
Yep. Along with the highest mortgage payments, along with the highest everything payments. Yeah.
Medical debt and so on. So the entire point of the platform is I want those people to be able to purchase a home as soon as humanly possible, because you have everybody that thought the market was going to crash, you and I can tell them now, you were wrong.
That's right.
You were wrong. It didn't.
You know what? That's funny that you say that, because all the while seeing this on social media, on YouTube, the comments and different channels that I watch and subscribe to, I wanted to just say, God dang, quit being a hater. That's what it's happening, is you are hoping that the market crashes so that you can say you were right, or you can feel good about your situation, instead of going, man, let me do my research. The market, even if it crashes, comes back always.
It always has.
Absolutely. And instead of asking how to get into that market, they're bashing the market in itself and praying against it.
You had a podcast that I watched that literally was talking about how to navigate that market. And here's the reality, okay? Hustlers are going to thrive in whatever environment you're putting them in.
True.
Okay? You and I know hundreds of loan officers that got in the game because refis were falling off the sky.
That's right.
Okay. You and I also understand that the sub 3% interest rates, those were not natural.
That's not real. It's exactly right. I called it free money.
Yeah. We're never going to see it again, right? Everybody got the steamies.
That's right.
Everybody did. So instead of that, here's what I hear. Okay. This is what a client will say to me. JP, right now, I think I'm going to hold off, man. I think I'm going to hold off. The rates are too high. And so this is my explanation to them. I can't give you any guarantees in life other than death and taxes.
That's right.
But I can guarantee you another thing. That house that you love, 6 months down the road, it's not going to be there.
Right.
Okay. I don't know what's going to happen with the rates in 6 months. Okay. But what I can tell you is that I don't care what the rate is. If you're renting, your rate is 100%.
That's so true. I mean, it is so true. And the idea behind why consumers that, and I'm going to say can't buy, use that as a level explanation as to why they're not purchasing. Oh, well, the rates are too high. Guys, you're only pigeonholing your own self into this corner that eventually you may be alone because everyone else around you is looking to purchase. Why? How do we know that? Look at property values. They're not going down.
They're not stopping.
Look at inventory. It's not going up right now. So what are we doing? People are still buying in today's market with higher interest rates. And the ones that are able to sacrifice, and I'm talking to first-time home buyers right now, because that is the largest demographic right now of consumers that are holding off to purchase for rates to come down or property values to come down. When me being putting my producing hat on now, most of the applications I'm getting are not from first-time home buyers. They're from second, third, buying investment properties, trying to find a way to acquire the next property, regardless of what interest rates are. Why? Because they understand the idea of equity, leverage, and throwing away money with rent. What are your thoughts on why consumers take that stance as far as if they can't buy, or do they not know that they can buy? What have you seen in the last couple of years working with folks that are challenge credit, and loan officers that you're referring to are referring to you guys as to what they need help with. What are you seeing?
Honestly, I look at it as being a genetic thing.
Okay.
And let me explain that, right?
I think I understand. Go ahead.
If your grandparents had bad credit
Mm-hmm.
and did not understand finance,
Mhm.
okay? Your parents had bad credit,
Right.
did not understand finance. You are 3 times now
That's right.
more likely to have bad credit and not understand finance. Also, in that situation, a lot of people are in a mindset of a scarcity.
Yes, very much
Okay.
so.
And so back to the question, nobody ever told them, yes, you can get a home loan.
Mm-hmm.
That's why I love working with loan officers, because they're the only ones that, hey, you know what? No, you can't get a home, no, but it's not no, it's a not yet.
Right.
Let me help you. Let me guide you. Realtors, God bless them, they're out there.
Yeah.
Right? Showing houses, blah, blah, blah. Well, are those people loan ready?
Right.
Okay. Are the finances? And another thing is, well, Mark, I'm paying $3,000 in rent.
Mm-hmm.
How in the world am I going to afford a $3,500 mortgage?
Mm.
Okay. We're going to teach you how to budget your money. I will find that money
Correct.
because it's there. You're just misspending it.
That's right.
It's going to places. Back to the being on the fence thing. And I'm speaking from data that we collected. 82% of those people on the fence, because of the rates, because I don't have enough money, because of whatever, they're not going to be ready.
Right.
When they finally decide to get off and go and get into the market, now you're going to have all these people that are already purchasing their second home, that are already looking into investing, right? And when I say your interest rate in your rental property is 100%, you're paying somebody else's mortgage.
Correct.
Okay.
Correct. It's funny that you say that. I've got a good question here for you, but before you do, I've got a. I saw this the other day, and let me see here if I can find it. Can I find it? Where is it? Was it on my story? Where did I put that sucker? It was a funny meme, and I'll throw it up on the screen when I do the editing for this. But it says, let me see, where is it? Right here. Okay, so it's kind of a funny thing, and it says, poster, if my rent money is paying for my landlord's mortgage, shouldn't I be part owner? And the response to this from someone else says, this reminds me of a time when I bought a Big Mac and became the CEO of McDonald's. and it's true and funny at the same time, because the logic in somebody thinking that because they're paying the landlord's mortgage, they should even have any kind of stake in that property.
You're not allowed to paint the walls.
It's a good point, unless I say so. That's right. And that idea comes from a lack of education. It's their mindset and what their belief is, skipping over the concept and logic that landlord, whether it is a corporation or an individual or a family that owns that investment property, went through whatever it took for them to acquire that property. Who knows? Someone like myself, who in the beginning had bad credit too, fixed it and never looked back, but now preach about it to show what opportunities are out there if you take shit like this seriously. And I think that they're missing that concept of tying the hard work, the sacrifice together with actually achieving something that has long-lasting effects and long-lasting fruits to that labor. I don't know. It's kind of silly. Now, back to this 82% are unready when they say that they're ready. Can you talk more about that? Why? I know the reason, but I want to hear you kind of articulate to make sure that it's on the same level of what other loan officers probably believe. Consumers out there will say, I'm not ready, I'm not ready, I'm not ready. And for me, I believe the reasons why is credit. They don't know that they can buy. They believe that they have all of these things that they have to fix before they have somebody look at their information. Again, another reason why we created LoanBot, Review My Mortgage, allowing you to go, okay, wait a minute, I'm not that far off. Here's the programs that I actually can qualify with the credit score, with the down payment that I have. But these individuals tend to they're putting the cart before the horse, but in a different way, because now, hey, I'm ready to go. I'm ready to buy, but didn't take any of the steps in the last 2 years after you told everybody, I'm not ready, I'm not ready, I'm not ready. What are those things that they're unready? What is it? What are the things that are missing?
The majority of it, it's going to be, and I'm not talking about bad credit, good credit. I'm talking about a 620 to a 720.
Sure.
Okay. There is a completely different life on the other side of 760.
Yes, sir.
Now, let me say that again. 760 on the other side, there's a completely different life where your finances no longer really matter that much.
Right.
Right? Because you can now obtain and access products that are incredible.
Correct.
Right? The best rates.
Yep.
The best rates. The other thing is going to be the fact that I've heard people on financial networks, on financial themed podcasts say that right now is better. You're better off renting. And I'm like, how?
You're right.
Explain to me how renting is any better than owning your, the bank can come and take it. Not if you make your payment on time.
Correct.
Well, what if I can afford it? Get a second job. Get a second job.
I think the idea behind it is they do not understand the idea of sacrifice. We went through a pandemic period to where interest rates were low, property values were rising, but that rate being so low set a false expectation for today's first-time home buyers. First-time home buyers making $60,000, $70,000, $80,000 were able to buy a $300,000+ home with a comfortable payment. And now they're trained to go, well, 300 is the price range that I need to be in, but now my $300,000 payment is $2,800, $2,700 instead of the 21 that it was several years ago. Well, my message to them is learn to sacrifice. Understand what your budget is. There's levels to this shit, so to speak. You've got to crawl before you walk concept. And I don't know if they're unwilling to do it or if it is something that they're just being stubborn, or again, back to the lack of education piece. I mean, what are your thoughts?
So, well, you just added one. You added one layer. Okay. You work out, you take care of your body.
I do now.
Because you know what the long-lasting effect of that going to be. Okay?
Yeah.
So number one, doing the same thing every day is easier than taking a good look at the mirror and saying, hey, you know what? It's time for me to pay the piper. Okay? Your kids, man.
Yeah.
Even if it's not for you.
Right.
Okay? You have now an opportunity to make a generational change. And this is the way that I like talking about it. Your grandparents had bad credit. Your parents had bad credit. You had bad credit. You now have the incredible, amazing, wonderful opportunity to stop that.
Right.
And have the rest of your legacy go in another direction. Okay. So that's number one. Number two, people that are still stuck in my buddy and his wife bought a house below 3% don't understand that was not organic.
Correct.
There was nothing organic about it.
Correct.
Okay. Number three, back to that same point. One of the biggest follies of human beings is that today we live in the instant gratification.
So true.
That's where we are today. That's the society.
But also another reason why our product and platform and y'all's product and platform works, simply because people want results right now.
Yeah.
In addition, they want to do it themselves.
Yeah.
Go ahead. Keep going.
Yeah.
Sorry.
You're right there. But also you and I know that it took 7 years to ruin a credit.
That's right.
And you can't fix it in 30 days.
That's right.
It will take years to build credit. However, you can ruin it in 30 days.
That's so true. And when I see credit scores like 450, I literally say, man, it took some work to get
You
there.
tried hard, bro.
That's right. It took you
It
some work
takes
to
a
get
lot
there.
of work to do that. Now, there are situations, and I'll get back to the other 2 points I'm trying to make, but there are situations where we see parents putting bills in the kids' names.
Mhm.
Like, man, if you're not going to set them up, at least don't set them back.
Correct.
If you're not
Man,
gonna,
that's a strong point. Yes.
but back to the biggest fault of humans is how we look at history.
Mhm.
Okay. People are looking at 4 years ago, this and that happened. Okay, well, I have a friend, older gentleman, who tells me the story that when him and his wife refinanced their home at 18%, they were literally outside dancing on the street.
Wow.
Right? So if you want to take it, let me hit you with a little biblical thing here.
Please.
It's 7 years. The year of Jubilee is 7 years, right? Every 7 years, we release everybody, you give everybody back their stuff, whatever the case may be. Now, let me propose this. Why the hell are we not looking at what happens every 14 years? Because that's how banks and everybody else does it.
It's true. Wow.
For
Big concept right there. Yes.
about it. We're out here. Hey, what happened last month? What was the trend? What did so and so do? Oh, well, Mark Jones just did X amount of loans last month. Mark Jones worked his ass off for 14 years.
Right.
And prior to those 14 years, he probably worked his ass off for another 14 years.
Mhm.
Right? So I always tell my clients, you need to understand that right now, it's not about getting a home in 4 or 5 months. This is about changing the way that your family it's going to thrive or not.
Mhm.
Right? Nothing changes if nothing changes.
That's so true. Definition of insanity right there.
And
Yeah.
then the last thing is, I think that a lot of that is being pushed by investors.
I agree.
Okay. Why? And I'm going to talk from my region because
Please.
I don't know the market here that well. But last year in Colorado, you go back and you can look it up. I think it's 32% of every purchase made in Colorado was sight unseen by an investor.
Yeah. I mean, I believe that.
So let me ask you this. Hang on. The market's going to crash. All of these things are going to happen. Then why in the hell are they buying 32? If the investors are buying 32% of the properties out there, why will they be doing that if they know the market? If the market's going to crash, who's going to know before anybody else?
The investors.
Okay, so why are they investing more and more and more? And by the way, that number's probably up.
Oh, I'm sure. Yeah. I mean, we're not just talking. Yes, there's a large present of your corporate investment companies like your BlackRocks, your Vanguards, that are buying things cash and they're holding on to it. Why? Because history repeats itself. The value is going to go up. And if they can rent that property out and keep it rented, well, that's a pretty solid investment altogether for them. And the idea that consumers, first-time buyers, and I'm going back to the first-time buyers because they don't know better.
Yes.
They need to take what you just said and go and look at it for themselves to go, okay, wait a minute. Why are they continuing to buy? This is weird. I mean, I'm not buying, but why are they? Well, guess what? They've got experience on you. They've got the capital on you, but let's go back even further. They didn't always have the capital. They didn't always have the experience. So you've got to start somewhere, throw your hat in the ring, and grasp the concept of this whole property equity leverage opportunity that is out there. And there's folks like myself and yourself that are trying to help them get there, but still the fear of either taking that step or the fear of getting the bad news and being faced with the person in the mirror, having to go, okay, it's time to make a change. It's time to adjust something. It's time to be faced with reality of my current situation so that I can then fix it, move forward, and start or stop the generational curse that you're talking about in moving forward with buying property, leveraging property, leaving property, etc. I mean, that's such a big concept right there that you're bringing up. And I want to get your take on basics. You mentioned something, and then I want to get into UQUAL, and I think this could tie into it. The idea behind your credit is fluid. It's constantly changing. this concept in itself, consumers still don't get that because they don't teach it in school. The only time you ever find out about it is when you apply for something. And then even when you apply for something, those things are not necessarily explained to you. They just pick a score and run with it. And this is why you got this. Whereas we know credit is constantly changing. Why is that? Why is credit constantly changing? What are the factors that are going into that?
I'll give you my answer after I ask you a really quick question. Yep. Why do they not teach that in school?
God honest truth, and I don't think it's a conspiracy at this point. It's not a part of the program. And what I mean by that is the programming that is in schools these days, and even prior to, when I was in school, they didn't teach that stuff. They didn't teach it to my parents, I would imagine. It doesn't go along with the overall bigger picture that we have the Vanguards, we have the BlackRocks that are buying these things, the investors. Who do you think builds the schools? Even though we pay for them, who's really building those schools and why? In addition, and I do not mean to in a negative manner, are you going to learn finances from a teacher?
No.
I mean, I don't think that it is right to learn finances from a teacher unless that teacher has built an empire and is teaching because it's a passion, not for the money. Diamond in the rough, I'm sure they're out there, but I don't think that they would create a curriculum for that because it takes away from what the overall goal is, which is go to school, make good grades, get a good job, retire at age now, who knows?
Maybe.
Exactly.
Retire age, maybe.
That's right. That's my answer. I think it is not a part of the overall agenda. And when I say they, I'm talking the people that are pulling the strings. We're not pulling the strings. We're working within the parameters of what we have the ability to do, the knowledge that we know about, but we also do not pull the strings.
Okay. So we're there now. Let's go. The same companies that create the system are the same companies that are telling you not to buy a house right now because of the markets being so volatile. But they're the same companies that are putting all the money into real estate, okay? And they have figures out there, okay? I personally, as a Christian, love Dave Ramsey's message 50% of the time.
Okay.
50% of the time. The other 50%, when he's telling people, hey, you shouldn't have credit cards. How about you teach them how to use credit cards?
Yes.
Okay? That's my number one thing is, why are you telling somebody don't do this, this, and that while you're doing it yourself?
Correct.
Okay? Oh, well, you shouldn't spend money or time and effort trying to develop a fintech platform. Really, Mark? Because you have a hell of a really good one, 2 of them, right? Review My Mortgage Loan Bot.
Right.
So why would you go tell other entrepreneurs not to do it as opposed to mentoring and teach them so on?
Right.
There's actually a name for that within the credit industry, okay, that was given to us by the financial institutions called rate diversity.
Ooh, talk about that.
Okay. Doesn't make sense, okay, for the banks to have JC, me, you, and everybody in San Antonio running around with an 800 plus credit score.
Why is that?
Does Capital One, Discover, Bank of America, Chase, is Jamie Dimon going to get his $40 million bonus if all of us are running around with an 800 plus credit score?
Absolutely not.
Okay, why not?
Because there is no interest made. And in order for you to walk around with that 800 credit score, that means you at least have your revolving utilization below 15% at all times. And if it's below 15%, you've got, let's say, $1,000 balance. So you're at $150. Let's say your interest on that is 10%. They only made what, $1 on
Who cares?
50?
Okay.
Exactly.
But what you just said about CCU, credit card utilization, I guarantee you there's going to be a gazillion people in this comments like, oh, I was told 50%. You know who told you 50%?
Jamie Dimon. Yes.
And I'm going to call them because, again, let's not, I wish we could, but whatever. Let's call them online credit models.
Okay.
You with me?
Yep.
Online credit models. that are on your phone,
Mm-hmm.
okay? They sit behind your phone app or your
Right.
banking app. They sit on the Credit Karma of the world, and that's the one and only time I'm going to mention them because I hate them. But let's just call them online credit models, okay?
Okay.
The online credit models are looking at a completely different algorithm
Mm-hmm.
than what a lender is going to look at. Do you know what a lender cares about? 5 things, okay? Because you're all stuck with the one thing.
Mm-hmm.
FICO 2, 4, and 5. FICO 2, 4, and 5. By the way, there's 28 different FICO models.
Oh, yeah. And growing as more things
What's
come
the-
out.
Oh, FICO 10T. Dude. Okay. So we had this, and don't quote me on it, but I'm pretty certain I don't throw numbers unless I know my shit. 1956
Okay.
is when the FICO algorithm gets created. What people don't understand, if I say, Mark, can you please give me a Kleenex? What am I asking you for?
You're asking me for something to wipe your face.
A tissue. I just want a tissue. Okay. Or, hey, can I get a Coke?
Yeah.
Do you see what I'm saying? FICO is a Fair Isaac company.
Okay.
Do you know what the Fair Isaac company does?
Monitors your credit, supposedly.
They're a software company.
Ah.
They're just a software
That's all
company.
it is. Taking data in,
It's-
analyzing it, throwing it into the algorithm.
They create the algorithm and they sell it to you and to everybody else. They don't even know what the hell is going to, they just set it up and here you go, right? Well, why is there so many FICO algorithms out there, Mark Jones? Why is there a new Windows operating system coming out? Money.
That's
It's
right.
all about money, bro.
That's right.
Okay. But in the mortgage industry, we are still using today
Mm-hmm.
the same shit we were using in 1956.
Wow.
Okay. So how does this come to be? And you're going to laugh at this. Breakfast time, bunch of ladies, mink coats, mink little hats, New York, breakfast at Tiffany's.
Mm.
Yes. And the announcement of Diners Club.
Mm-hmm. Yep.
The passport to luxury.
There you go.
Well, Mark Jones, who are we going to give the passport to luxury to?
Only the people that can afford it.
Okay, so how do I know you can afford it?
Ooh, good point.
Okay, so let's hire somebody
Uh-huh.
to create an algorithm, also known and for what we do, a risk assessment program.
Okay.
So I'm going to get this guy, an engineer and a mathematician. One of them is called Bill Fair. The other one is named Earl Isaac.
Okay.
And here's the birth
There you
of
go.
the Fair
Fair
Isaac company.
Makes sense.
Okay. 1986, the mortgage company actually starts utilizing, implements the FICO 2 algorithm. Well, why do I have 3 credit scores? Why couldn't I just have 1?
Mm,
Because where there's place to make money, people are going to jump in.
that's right.
So now we have the 3.
Mm-hmm.
Okay. Each one of them using its separate version of the FICO algorithm, 2, 4, 5.
Right.
Okay. So now you have 3 companies spitting out a number based on an algorithm that was created
Years ago.
years ago. Okay. Let's go even further. Okay. Go back 50 years, 1970s. I'm not going, it's not that crazy.
No, it's not.
Okay. A woman couldn't open a bank account back then.
Wow. Yeah. And now women
So the-
have higher credit scores than men.
But right, why is this happening?
Yeah.
And so you need to understand that from the get-go, certain things were not set up for us to win.
Right.
And that's why I call it a monopoly game. It is a very complicated, always moving, always changing system, right? So you just said something that a lot of people had never heard. 15%. How the hell do you know that?
Right.
Well, look what
Experience.
you do. But that's the thing,
Right.
right? You see it. And so let me give you the other side of that coin. People utilizing online credit models, and they'll tell you, right, your clients, oh, the online app that I'm using for my credit monitoring says I went up 5 points, and it went down 6 the next day, and the next day it went up 11. And dude, you're just using your credit card. That's all it is.
That's all it is.
But the reality is, what do they want you to do? They want you to be on their app clicking. You're not going to use an application that is going to give you a shitty credit score.
That's right. It's
Okay.
true. It's true.
Okay. And then one of the things that I hear that scares me is the loan officer that referred me to you, because all our referrals come from loan officers. Okay. That's our business model. Again, we're in only one vertical, and that is the mortgage industry. The loan officer that referred me to you gave me, listen to this, gave me a lower credit score than what I have.
Mm.
Gave me a lower credit score than what I have. The loan officer is using the same exact model that every other loan officer in the United States is using.
Mhm.
Number one. Number two, wouldn't you want everybody that comes through those doors to have an 800?
Of course.
Conventional loan.
Let's go.
Next. Conventional loan. Next. Right? We would turn in paper, man.
That's right.
Okay. The other thing is that there's not enough of this. So when it comes to the education piece of it, without getting angry, let me just go really fast through it.
Mhm.
It's only 5 things you got to pay attention to, man. 5 things. Number 1, it's called your credit history.
Mhm.
Very simple. Do you not have late payments? Do you not have collections? Do you not have a repo? Well, Mark, it wasn't a repo because I turned the car in.
Well, let me share my screen real quick and tell me what that says. So instead of wasting time on how it got there, let's talk about how we can fix it.
Yes.
Right? Go ahead. Keep going.
That's it.
Number
That's
2.
it. So 35% right there. Do you not pay your bills?
Mhm.
That's it. Number 2, credit card utilization. And by the way, just if you want to be a maniac like myself, try 10%.
10%. Yeah.
It is the ratio of your balance to limit.
Correct.
So why is 1/3 of your credit score depending upon credit cards, and yet you have faces on social media telling you not to use credit cards?
That is odd, but you're right. Why? Because it's not a part of the plan.
Okay. But then it's 1/3 of your credit score. Oh, I don't have any credit, Mark Jones. No worries. You're going to go ahead, get yourself a secure credit card. Come back in 45 days.
Boom.
740.
That's right.
Dude,
That's right.
want to set your kids up at the age of 17, make them an authorized user on your credit card.
Burp. On the credit card that has no late payments, has a good balance, utilization under 10%. I've had customers before, and bless their hearts, they just didn't know. They weren't educated. I heard or I saw to get authorized users. So my mom added me to her card. Well, that card is maxed out and she's missed several payments. So that credit history is now your credit history. So do me a solid, go get removed from that account. Let's start over.
Yeah, the super quick rules on that. Number 1, make sure that it's a major bank.
Correct.
Okay.
That they report to the 3 major credit bureaus.
And not only that, they're going to retro report.
Correct.
Okay. So with that being said, make sure 1,000,000% that the account has never had a late payment.
Yeah.
Okay. Number 3, you want to make sure that the balances are low. Number 4, it doesn't make any sense to put somebody as an authorized user on an account that's less than 2 years old.
True.
Okay.
Good point. Yes.
Why? Because 15% of your credit score, it's now your length of history.
That's right.
Biggest mistake people make.
Oof. I know this one.
Say it.
Closing credit cards.
That's it.
Mm-hmm.
Well, but I don't shop there anymore. I don't go to Kohl's anymore. I'm a big boy now. I go to Nordstrom.
Yeah.
You know?
Yeah.
Well, guess what? That Kohl's credit card that you had was 10 years old.
That's right.
And what people don't understand is that if you're going to get anything out of the podcast, please, everything about credit is averages and percentages.
That's right.
Everything about credit is averages and percentages. You and I go play golf. We both end up breaking an arm just to
Same time.
same time.
Driving the cart.
Both of us get a bill. Okay. I'm going to go back home to them, but they're not going to find me. They're going to send the bill to the wrong address, blah, blah, blah. Okay. Doesn't matter. For whatever reason, we both end up in collections.
Okay.
Your bill is $10,000. My bill is $20,000. And it hits the collection for both of us on the same day. We lose the same amount of points. The balance doesn't matter.
Right.
Okay. You can have a $10,000 credit card. My credit card is only $1,000, but I'm only using $10. You're using $5,000. I'm going to have better credit than you.
That's right.
Okay. So everything is averages and percentages. So back to length of history, and where people mess up the most is the fact that I had a credit card with Kohl's that was 10 years old. And I got an offer for the Chase Sapphire Reserve. Ooh.
Hello.
Points. I opened that. Okay. 10 years plus 0 is still 10. But now I have to take my 10 years and divide it between 2 credit cards.
Right.
So I just went from 10 years to 5 years. So if I'm telling you that 15% of your credit score is the length of history, did I just not lose 7.25% of my credit score?
Absolutely.
Okay. And every time that you do it, because now each one of those credit cards is going to account for 15% of your credit utilization. Okay. So now you have those three pieces. Credit profile or credit mix is the most complicated one because people don't understand it.
Right.
But basically, the FICO algorithm likes a 1-to-1 ratio. And I have people like, why do you have so many credit? Oh, well, the loan officer says I need 3 credit cards. No. The loan officer said you need 3 open and active accounts,
Right.
an installment, a revolving account, and then you can have what is called an open or other. Obviously, if you're blessed, the M pops out, the mortgage.
Right.
Because that's ultimately what you want to accomplish. And we have a little thing at work, RIMO, RIMO, revolving installment mortgage, open or other. What is an open or other? It is an account that you pay completely every month. It's got a name.
That's right.
Amex.
There you go. There's only one. I got mine.
And so
And it's heavy.
But that's the thing, right? So prior to 1997, we didn't have the category of open or other. Okay.
Right.
So Capital One, Macy's, and Amex, they all get sued because whatever your balance was showed up as your limit. So you were always maxed out.
That's it.
So, right, they ate it. And Amex walks out of there like, that was close. Well, why? Because they're not a credit card. They're a charge card.
They're a charge card.
Right?
That's right.
So other tools now that we have, because now we have this new category, so we have to adapt to the game, right? Let's adapt to the game. You have incredible tools like self-funded installments you can get online, okay?
The secured card, those types of
secured cards, the thing, companies that will, for a very low fee, will report your rental history.
That's right.
So now you have those things, right? So
you'll start to see things that say self-reported on the credit.
I don't like those.
Nor do I. They don't even
help on one bureau.
That's right.
Okay. And when you're going to buy a mortgage, it's not your highest or your lowest. You need a middle credit score. And so if you get an Experian Boost, well, it's called Experian Boost for a reason, right? Is it going to boost your TransUnion and your Equifax?
Not at all.
Okay. And so that the credit mix is like,
why?
My experience says, I have a 720. And the other 2 bureaus are like 512. Good job. So the credit mix is that, right? Like having the right, and it's called a credit profile. Somebody with JC and I come in and we want to get a mortgage. I got 15 credit cards, bro. And he's got 2 credit cards and a car loan. And he's actually had a closed car loan that he paid on time all the time. He's going to have a much attractive profile than me.
Yeah.
Right? 15 credit cards, that's like playing Russian roulette with late payments.
Yes, it is.
And by the way, to not follow their own, there's been severe amount of glitches lately with autodraft.
Wow.
And guess, hey, it wasn't my fault. The bank manager told me there was a glitch with my autodraft. Okay, well, call the bureaus and dispute it.
Yeah. Wow.
And that's what they'll tell
you wouldn't believe how many people don't actually follow up with that. I think that's what they're banking on potentially is out of 100 people, 80 are going to catch this. 20% are not.
No.
Winning. And that's a bummer, you know? So let's talk about where are we at on time? Okay. We're rolling. Okay. So let's see if we can wrap this thing up with the UQUAL. No, we've talked about plenty of tips on credit. We've talked about how credit is utilized to leverage, to grow your net worth, to potentially open a business, to potentially fund your next whatever. But it starts with the education piece and understanding how to utilize it. How does UQUAL help the consumer with that and lead them down the path of homeownership altogether? Can you sum that up?
Yeah. So we have 2 tools. One is going to be our learning center, which is something I'm personally very proud of.
Okay.
Because it's literally designed to help my mission, right?
Love it.
To narrow the gap between financial and credit. But then we got amazing people. And I don't care how incredible the technology is, our AI, amazing. All of that is amazing. But we have amazing people that actually care. These people are there because they know their clients.
Mhm.
They work with that client every 30 days, phone calls, right? Hey, do you get this and this and this done that we needed to get? Because remember, having an open and active account is 30%. Yeah, I got it done. Congratulations. You will hear a bell,
Wow.
right? Go off, ding, 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 when we help a client purchase their home. Not when they got approved. No, when
No.
they're in their home.
That's
The
awesome.
best part is to be able to have that around the client.
Yeah.
The loan officer, their credit coach, the platform. Yes, the technology, again, is amazing, but it doesn't go anywhere if you don't have people helping, cheering the client on.
Absolutely.
And that's to me what I'm the most proud of with the company is the fact that I got people in there that actually go there smiling because they understand that they're there to serve.
Yeah.
You got to be there. That's your job as a loan officer.
Absolutely. Absolutely.
But
And
education
I tell
is crucial.
people all the time, matter of fact, it's written right here. I got into this business to make money. 100%. I'm not going to lie or sugarcoat that. But quickly realize, holy cow, I am helping somebody every single time I answer that phone, every time that I meet with that consumer. I'm able to use my experience that I've encountered in both the personal, financial world, all of that to give back to the consumer to get to that end goal of changing their life. Because in my opinion, when I became a homeowner many years ago, it changed my life. That one property for $130,000, I talk about it all the time, with zero money down while my wife was in nursing school, changed our life, turned into our first investment property, then turned into the first house that we sold and made over, I don't even know what it's 60 grand. It was like, holy cow, this is real. Yes.
Yeah.
And I use that every single time I talk to a borrower so that they can feel and understand how impactful this decision and moving forward with this decision is in their life. So yeah, that's super important. And I think that UQUAL is on the money in what you guys' pursuit is to consumers. The idea of taking credit, something not taught in schools, and real estate mortgage and parlaying them together because they are already parlayed together.
They go hand in hand.
You absolutely are correct.
Yeah.
They go hand in hand. You can't have the house without the credit unless you built the cash. And typically you don't build the cash without the credit to leverage to get to that point.
Yeah.
How about that circle? That being the case, JP, this has been a great conversation, man. Learned a lot. And as I always say, it's a little therapeutic for me to get this stuff out as well, with a like-minded individual that understands what we're going through every day in the pursuit of educating consumers, but also the resistance that we get when they don't understand or they don't believe or they don't want to adhere to the reality of that person in the mirror.
Yeah.
You know?
Yeah. And I think as long as we come with a heart of servitude, right, we're going to win.
Absolutely.
Long term, we're going to win. Like
Yeah.
I know for you, there can't be a better feeling of somebody sending you a picture of them in their home.
Absolutely. You are correct.
So
You are correct.
that's the push.
Is there anything else that you would like to leave us with before we close this thing out? I mean, it can be a tip, it can be anything, shout out, whatever. Floor is yours.
Buy a house.
Buy a house.
Buy a house as soon as you can. Buy 2, buy 3, buy however many houses you can.
I love
and,
that.
And when it comes to credit, it's just a matter of learn the game. Just
Amen
learn
to
the game.
that. Amen to that. So if folks wanted to get, because we've got loan officers that watch this show, how would somebody get a hold of you? Because I don't believe this is a service that consumers can go directly to your website. They have to be linked with a loan officer in order to utilize leverage and get benefits from you guys' platform. So how do they get a hold of you?
Yep. They can go to our website, UQUAL.com, or our line is 833-498-7825. Obviously, I love talking to the loan officer to understand their market and then how we can serve.
Absolutely. Well, hopefully this gets back to Kyle up at the top because I want to have a meeting with him. There you go. I'd love to have a meeting with him and show him what we've built so that he can see how what a great job he's done. I mean, hands down, it's pretty genius. And you can tell that the mission is intentional. It's not something that I'm doing this to make money. No, it's truly helping people in many different ways. So that being the case, man, I hope you have a safe trip back to Colorado. And I thank you for joining me on
Oh, man, it's been a blast. I appreciate you.
Absolutely. Well, ladies and gentlemen, I hope you guys got something out of this. There's plenty to learn in regards to credit. And it's pretty tough to win this game of life when the goalpost continues to move. And if you're not keeping up with what's actually happening with the things that matter, kind of like credit, you'll be left behind, because if we're focused on time and how much we have left and what we can do with that time, standing still leaves you behind. So that being the case, guys, hope you continue to like, subscribe, share with a friend. But until then, we will catch you on the next one. Welcome to Key Factors Podcast, where knowledge meets ambition in the fast-paced world of real estate and mortgage. I'm your host, Mark Jones, bringing you the latest insight, trends, and expert advice to navigate this dynamic property market. In each episode, we dive deep into the heart of the industry, dissecting market movement, exploring investment strategies, and unlocking the secret to real estate success. Whether you're a seasoned professional, an aspiring investor, or simply looking to stay ahead of the curve, this is the ultimate guide to making informed decisions in the world of property and real estate. So grab a seat and let's uncover the key factors that make all the difference. Welcome to Key Factors Podcast. Let the journey begin.